Okay, good morning everyone. I didn't put out a video yesterday on the stock market technical analysis. There wasn't a whole lot going on. But today we've got some movement and I want to talk about we're going to start out with the broad markets and then I want to talk about these gold stocks. They're moving, they continue to move to the upside, so we want to talk about those. Triple Qs. All right, so, I took a short the other day right up in this area. I covered that short. It pretty much break even. I just don't see, this is a resistance level right in here at about 374.40, and we've overshot that a little bit. You can see the resistance comes back all the way here on the hourly chart. It was resistance there, and then it was support through here, then it was resistance there. So that's a big level, and we're trading above it, but until I see that really start to break down, I'm not going to give it, I don't want to give a short much room. We are holding above that key level right up in here, and you can see we came down to it, bounced, and we're continuing to really just hold above it. So the next sell signal, at least from my perspective, would be a break below that level. If we get an impulsive break, then we might have seen the end of this rally here, and we're going to get another move lower. But I'm not confident in that right now, so it's not something I'm willing to really give a lot of room. S&P 500 really just continues to move higher. We're making all-time highs today. You can see here on the hourly chart, we just made just moving above the previous high. On the daily chart, there it is, all-time highs. Now this high is a continued divergent high. So you'll see here on the momentum how we have basically big negative divergence, and we just continue. Each one of these new highs continues to be a divergent high. So again, I talk about how negative divergence is not a reason to just jump in short. Just the same as bullish divergence is not a reason to jump in long. We need to see sell signals, which is breaks of trendline support and other indications that you're going to get that big correction. And as of right now, we're just new divergent high, but no sell signal. So just let that thing do what it wants to do. Pretty impulsive rally, too, off of the lows. You can see it's just basically just been all buying ever since we corrected and hit that trend line. And so that trend line marked in red down here, again, that's a key level for me when it comes to really taking any kind of sizable short position. This comes off your 2009 lows on the weekly chart, and I've got it really marked out. Each and every time we've hit this trend line, it's been support all through here. We broke back in 2018 when the Fed was hiking interest rates. They broke the trend. And then they started cutting interest rates and doing stimulus, trying to pump it back up. Getting into into this year, we've recovered the trend line, and every single tag of that trend line has held. So you can see, and that was the case recently as well. So until that trend line goes on the weekly, we can trade down to the trend line, and that's obviously the short opportunity. When you see breaks of trend line support and you see sell signals, we could trade down to the trend line. But when you're down there, it makes sense to cover your short trade and wait for a break of that trend line for an indication that there's going to be a deeper correction. Okay, I want to point out some long trade ideas. So CLX, again, I've talked about this one. On the weekly chart, we're right at support. So this goes back to really about 2011 timeframe. Clear uptrend trend line right there. We've pulled back to that trend line. And doing so, we've also put in bullish divergence. So you'll see here on the daily, clear bullish divergence on the RSI. See how we're moving up in momentum while price continues to move lower. And then same with the PPO, we've got bullish divergence there as well. So we have divergent lows. This was your last divergent low, this little dip right here. Below that trend line, and they've recovered it. Now what I'm looking for in the short term on the hourly chart is a break above this short-term trend line right here on this hourly. So you can see we've got a couple reactions where we've created this downtrend line, and a break of that, bullish breakout of that is likely going to be the buy signal or a buy trigger that we're likely going to head higher. Minimum target on this trade would at least be a gap fill up here at 178. 80, and that would be, from where we're at now, that would be a move of about 10-11%. So I like that as a minimum trade. So things to watch there. Okay, now let's get into the things that are actually moving, where there's, I think where the easy money's been, at least recently, and that's in gold and the gold mining stocks. So I've been harping on these for a little while, but I've been dedicating a lot more time recently because they've just looked so bullish across the board, a lot of these miners. So here's gold bullion. We've got a breakout above this level here at 1790 today. Pretty bullish breakout. That's a key level. If you look at the weekly chart, 1790 was your former high in the last, that's what capped the last bull market. So back here in 2011 and 2013, gold was in a bull market, for about 10 years, big, long bull market. And then it really ended up here with this kind of impulsive spike higher. Then it tried to continue to break once, failed, break twice, failed. Third time was the charm, and it went into a bear market for the next 6-7 years. Okay, so that level is 1790. That's your kind of key level on the weekly chart. And as I zoom into right now, you can see that's, we've been chopping through that level a bunch. It's been pretty choppy. So I'm not going to put a huge weighting into today's price action breaking above that level. But again, we're in this range here where we're kind of holding that key support level. We also have this near-term level of 1832.96. That on the daily chart was hit 3 times, once, twice, 3 times. So a break above that's going to be your next kind of impulsive buy signal. And I think we're going to get it. Again, I think that we are continuing the bull market that started back here in 2018 on gold bullion. It really actually started back in 2015, but we assembled a clean trend line here in 2018. There was your low in 2015, and we've been making higher lows and higher highs ever since. So if we're going to continue and make a new leg higher in this bull market, then you'd expect, then I'm expecting to take out these all-time highs here at 2,075. Okay, that was a blow off top right there, at least on this leg of this bull market rally, where you see when prices just go straight up like that, they often are due for a correction, and we've had that correction over since almost a year-long correction. I think the correction's over, and it looks like we're starting higher. So looking at the gold miners, you can see we had a bullish falling wedge. I've talked about this in several videos, so go back and watch my gold mining videos. And we had a breakout or a buy signal. That bullish falling wedge also came with bullish divergence right there. So down here at the lows, we started to build bullish divergence, indicating that the momentum was starting to turn up and price was likely to do so as well. And there's your breakout and continuation higher. So up 3% today. Several of these miners are up, quite a bit. Here's one, BTG. This one's pretty much gone parabolic, so likely due for a pullback. But again, pullbacks at this point, I think, are opportunities to take a long position or add to a long position, in my opinion. And you can see here BTG's up 5%, running into the 200-day moving average, so likely going to get, likely going to pull back there and get some sort of a reaction. We have support on this one right around, it's right around there at about 434, so maybe we get a pullback to that level. But from the low here, this thing is already up about 36% in just a matter of weeks. And the US dollar, the DX dollar futures, you can see continues to fall. So again, dollar moving down, gold moving up. That's consistent with what you'd expect. It doesn't have to play out that way. Sometimes the dollar can move up and gold can move up if you're seeing a fear trade taking place. But gold seems to be showing some relative strength in this market. So I'm sticking with it. These miners still look good. And you can see silver. Silver oftentimes will trade with gold, but oftentimes it's got a little bit more gunpowder behind it, so or octane or whatever. So it can, silver's up today 2.7%. You can see silver. We broke out in our buy signal on silver, came back here. I talked about that in silver, and we continue to the upside. So this came with bullish divergence. There it is. Marked it out. Talked about it in advance. And so far we're seeing silver pretty impulsively rally. So yeah, looking for more highs. Ideally, I think silver's likely heading up here, up to the 29.33 area of resistance. And quick trade idea, USAS. Again, this is a silver miner. It's a penny stock, so very high volatility. So again, what I do on these, when the lower the price of stock, the smaller the size of the position I take. So maybe if I normally take a $10,000 position or $20,000 or something like that, something like this, I might take a 2 or a 5,000. It really depends on your portfolio size and all that. But the key being taper down your position size for these high beta, high volatility stocks. You don't need as much to make good money, and they're higher risk. But this one, you can see on this downtrend line here on the daily, you've got clear reactions trending downward. There, and we had a little bit of a reaction right there, 2 days where we sold off, and today we're breaking above that, breaking out. So I'd expect that breakout to continue to play out, given that the gold and the silver miners in general look good. This one also had bullish divergence on the RSI, not so much on the PPO. It did have it on the RSI though. So looking at that one, I would look for some key levels. Obviously, you've got these reaction highs, so I'd probably just target some of those right there. And there's another one right up there. So for now, we'll just kind of mark that out. That looks like a good one right up there at 163. So again, that's almost, that's quite a ways up there. From where we're at now, that would be a move of about 76%. But again, given that it's a penny stock, they can really run. So likely, if you're going to get the impulsive breakout on this one, it's going to happen in a day. It's 1 or 2 days, and this thing will probably just rip to the upside. Oil, here's oil futures, continues to hold this uptrend line. So on the daily chart, we've got this clear uptrend line, and yes, we've been dipping below it intraday, but they continue to snap it back and hold it. So, oil is pretty extended, but we could obviously continue higher. So until you see a sell signal or break a trend, the trend is higher on this one. Slight negative divergence. You can see here on the PPO, we're starting to turn down on there, and we're just about to get that crossover. So, that would help confirm that negative divergence. So, if that's going to confirm, we're going to have negative divergence in this uptrend. We'll start to look for a sell signal, but again, I'm watching that trend line for that trade trigger. Okay, I've been kind of scanning around looking for anything else. That's about all I see. So I'm going to keep scanning for some charts. If you guys have any ideas or stocks you want me to look at, leave a comment below about with the symbol, and I'll take a look at that if it's interesting. Catch you guys on the next one. Bye.